Thank you for your time today, Seun. Let's talk about your expectation for yields.
Hi, thank you for having me. Well, like you said, I do agree that we'll likely see yields moderate in the coming week. And this is because we had a lot of maturities today, about 560 billion of bonds, and so liquidity in the money market. And as an indication, overnight rate has dropped from like 15 to 8%. So with a lot of money, investors will have to find where to put it, so that they can yield them something. And likelihood is that we see more people trying to buy fixed income in the next 1 week.
All right, now we saw that T-bills auction yesterday. I'd like you to speak to what we're seeing play out with post-auction sentiments.
Yeah, so going back over the T-bill auction, really, the CBN put up about 109 billion of offer, and they sold 150. The demand was about 570 billion. That's a bid to cover of 3.8, so which is really, really strong. So what we did see in the secondary market today is the unmet demand coming into the market to try and buy the T-bills in the secondary market. So we did see T-bills drop slightly in the secondary market today, especially on 1 year.
All right, but I'd like you to bring me up to speed on what we're seeing play out with the investment dynamics around the OMO bills as well as the special bills.
Well, we do. Those two bills are separate. First, the special bills can be bought by investors, and we do see investors express interest in buying, the special bills. However, the OMO bills more often respond to liquidity conditions in the market. Since we have a lot of liquidity in the market today, we do see people trying to buy the OMO bills. Anytime the market is tight, we see them trying to sell the OMO bills. So really, OMO more to the liquidity conditions in the secondary market.
All right, let me take you back to the bond space, and I'd like to get a sense from you what you make of the DMO's reopening of the 2028 bonds and the 2036 bonds.
Well, I do think that, when they do a bond, when they float a bond newly, they do have a shelf life. So my sense is that it's likely that they are nearing the shelf life of the one they've been issued before, and they did go to the next one, just to align with the tenors. The 2028 is like a 7-year bond, that is like 15-year bond, and the 50 is approximately like 30-year bond. So they do want to be issuing bonds along the 7, 15, and 30 for now. They're just picking the bonds that are close to those maturities for which they still have enough to shelf out to the market.
But what can you anticipate going into that next week's bond auction?
I expect a lot of demand because of the liquidity in the market. People have a lot of money, and they, like I said before, they need to put it to work. They do need to find something to yield. So I expect a lot of demand, like we saw in the T-bill auction yesterday.
All right, but let's get into the FX space and look at what we're seeing play out. I'd like to get a sense of what we're seeing play out in the I&E window.
Well, I&E window has been trading stable around the 410 region. Not much is happening. It's been relatively quiet. Hello?
All right, that's I can hear you. Can continue.
Okay, yeah. So I&E has been relatively quiet. We still see trade around the 410 region for a while, and it's been there for now.
All right, but finally, let's look at what we can expect from the June inflation figures expected next week.
Well, we do have Bloomberg estimate of around 17.8, which is like 10 percentage points lower than the last for May. So really, we just wait to see what they bring out for inflation. But we do expect from forecasts we are seeing. I just quoted Bloomberg that the inflation probably ticks slightly down.